What if you could save yourself from $1 million mistake just by asking a 5-word question? A recent college grad holding a life-changing $100,000 inheritance was about to make what seemed like a perfect, once-in-a-lifetime investment. But right before she signed the check that would have sent her entire future down the drain, she paused. And she asked one simple question. That question didn't just save her from financial ruin. It uncovered a massive deception hiding in plain sight. What was that question? And more importantly, how can it shield your money from the exact same kind of trap? Let's picture the scene. Our recent grad, we'll call her Alex, is smart, driven, and just starting her life. Then a grandparent leaves her $100,000. It's more money than she's ever seen. The responsibility feels immense. She knows she has to be smart with it, to grow it, to honor the gift. Almost on cue, an opportunity lands in her lap. It comes from a family friend, the co-owner of a local business, let's call it Main Street Manufacturing. On the surface, it's everything you'd want. The company has been a town staple for decades. It has a rock-solid reputation. They make something real, something you can touch. The owners are charming, respected pillars of the community. They give Alex a tour of the bustling facility, showing off loyal employees and talking up their deep roots in the town. Everything about it screams safety, stability, and security. They offer her the chance to buy a piece of it all. We want a partner who shares our vision, they tell her. This isn't some risky startup. This is a real established business. For Alex, holding that $100,000, it feels like fate. This is the responsible adult move. It's not some faceless ticker on a screen. It's a local business she can believe in. She's ready to invest her entire inheritance. But then, a quiet voice of caution whispers in her mind. "This sounds incredible," she says. "Could I just see your financial statements from the last few years?" There's a flicker of hesitation from the owners, but they agree. A few days later, a thick envelope arrives. Alex opens it to find stacks of paper covered in numbers, the company's income statements for the past 2 years. This is the exact moment most people's eyes would glaze over. Revenue, cost of goods sold, operating expenses. It looks like a foreign language. But here's the secret. You don't need to be an accountant to find the most important number on that page. When you buy a stock, you are buying ownership, a real piece of a real business. The entire point is to own a piece of the profits. So the single most important question you can ask about any business is this: is this business actually making money? That's it. That's the 5-word question. The technical term is net income. It's called the bottom line for a reason. It's the number you find after you take all the money the company brought in, its revenue, and subtract every single cost, making the product, paying salaries, rent, marketing, taxes, and interest on loans. After every bill is paid, is there anything left? That's profit. As Alex looked over the documents, she ignored the big, impressive revenue numbers at the top. She knew revenue is vanity, but profit is sanity. Her eyes went straight to the bottom line, and her stomach dropped. Last year, the company's net income was negative $1 million. They had lost $1 million. She checked the year before that. Net income, negative $2 million, a $2 million loss. In an instant, the entire story collapsed. The bustling factory, the charming owners, the decades of history. None of it mattered against those two numbers. This mature, stable company wasn't a money-making machine. It was a money-burning furnace. If Alex had handed over her $100,000, she wouldn't have been buying a piece of its future profits. She would have been buying a piece of its massive losses. Her inheritance would have been used as firewood to keep that furnace burning just a little while longer. The $1 million lie wasn't in what they said. It was in what they didn't. They were selling the story, hoping a new investor wouldn't look behind the curtain. They were selling the sizzle, praying no one would ask to see the steak. And the steak was rotten. Alex, of course, walked away. Her simple question, is it profitable? Saved her entire inheritance. Now, let's connect this to the stock market. Every day, investors make the exact same mistake Alex almost did. They get hooked by a great story, a hot tip, or a charismatic CEO. They see a stock trading for $5 and think it's a bargain, never realizing the company is losing billions of dollars a year. So, how do you apply Alex's lesson? You do exactly what she did. You look at the books. Every publicly traded company is legally required to publish its financial statements. You can usually find them right on their investor relations website. There are 3 documents that tell the real story. First, the income statement. We've already met this one. It's where you find the net income, the bottom line. Your first check is simple. Is this number positive? Has it been positive for the last few years? One bad year can happen, but a pattern of losing money is a massive red flag. Second, the balance sheet. If the income statement is a movie of the company's performance over time, the balance sheet is a single snapshot. It shows what the company owns, assets, versus what it owes, liabilities, on one specific day. You're looking for one thing. Do they own more than they owe? A company buried in debt is fragile. A small hiccup could knock it over. Third, the cash flow statement. This might be the most revealing. It tracks the actual cash moving in and out of the company. Accounting rules can sometimes make an unprofitable company look profitable on paper, but cash doesn't lie. You want to see that the business is bringing in more real cash than it's spending. Asking these 3 questions transforms you from a gambler into an owner. You stop chasing hype and start making decisions based on business health. The dream is always to find the next Amazon or Tesla. But for every one of them, there are thousands of companies that burned through all their cash and vanished. Your first goal shouldn't be to find a 1 in a million lottery ticket. It should be to build wealth by owning pieces of solid, reliable, and profitable businesses.